Hello. All right. So we're going to go over some of the most common mistakes we see happening in QuickBooks. And this is super important because we sometimes have a disconnect with clients who prepare their own set of books without having an accounting professional do it for them because they think that they've done everything that they need to do in QuickBooks. But then when we go to do the tax return and we log in, we see a lot of issues that need to be addressed before we can prepare the tax return. So the books are directly connected to the tax return. So we need them to be accurate in order for the tax return to be accurate. All right, so first place I'm going to show you is this banking area. So one common error we see is transactions still here that have not been categorized yet. So if we're working on your 2022 tax return and you say, yep, everything's all set, I've done everything, and then we see that there are 2022 transactions that have not yet been categorized, then we know that the books are not actually done. So anything that's sitting here has not actually been categorized yet. It's not on the books. It's not in your financials yet. Everything here needs to be assigned to a category in your books. Second issue that we see is a discrepancy between the bank balance and the in QuickBooks balance. So you can see those are listed right here for each account. If there are transactions that still need to be categorized, that can cause the discrepancy. So first, you'll want to clear out all of the remaining transactions here and then see if you still have a discrepancy, because these numbers should always be the same. And if they're not, then we know we have an issue. And that leads me to the third thing. Speaking of those kinds of issues, if we go over to accounting and then reconcile, doing a bank reconciliation or a credit card reconciliation is where we generally find the issues that are causing the discrepancy between those two accounts, between the QuickBooks balance and the bank balance. So if I just put in a sample right here so that we can have something to look at. This is what a bank reconciliation looks like, and this is for credit cards as well. You have a beginning balance and an ending balance that are pulled from your bank statement or credit card statement, and you enter those in, and then all the transactions that you've categorized are listed here, and they all need to get checked off so that this balance becomes zero. So then you'll want to check payments versus deposits on the bank statement and what you have here on this reconciliation screen. And the goal here is just to make sure that exactly what is stated on the bank or credit card statement is exactly what is in QuickBooks. So if you find that there are many transactions listed here that you need to uncheck or you cannot check off if you want the bank balance and bank statement to tie to the QuickBooks balance and QuickBooks numbers, then you have a problem. So we should not see any transactions here that are being unchecked unless they happen like at the end of the month and it's because they really belong to the next month's set of books. But anything in the middle of the month or the beginning of the month, like the way it looks right now, this is not okay. All of these are probably duplicates or some sort of issue that need to be addressed, and that's causing a discrepancy. So we want this number to be zero, and we want nothing to be unchecked. And we also, when we come in to do a reconciliation, if we see that there hasn't been one in a long time, like if we go to the savings account here, I can see that one has never been done. So that's going to be an issue. That means checks and balances have not been done. So we can't trust the set of books, basically. Doing the reconciliation is super important. And then a couple more things that we look for to make sure that the books are good to go is we look at the profit and loss. And looking at this, I am checking to see that income accounts look okay. And what I mean by that is that we don't have something like uncategorized income. So that is something that, you know, shouldn't be here. Everything should be categorized. Same with expenses. Uncategorized expense, can't have that as a category, or miscellaneous, or ask my accountant. These are things that need to be cleared up. They need to be put into the proper category. And usually an accounting professional is going to be the one who knows where these things belong. Also, cost of goods sold. If you don't sell a product, you shouldn't be using this category. This is for people who sell a product and have inventory that they're accounting for. So we see that sometimes with service-based companies, and we know that that's an issue. And then on the balance sheet, that's the last place we're going to look for some common errors. If we see negative bank balances, negative assets, things like that, we know there's a problem because that's the opposite, balance that an asset would have. When we see inventory asset, we're very curious if you're actually tracking your inventory correctly. Uncategorized asset, we should never see that. So that means something's not been categorized correctly. And undeposited funds, this should only be used if there are truly deposits in transit that just have, you've received payment and it's just hasn't hit your bank account yet. So when we see a large balance here and it's not because there's just a deposit in transit that's about to hit the next month or something into the bank account, then we know that there's an issue. Usually it means there's duplicates, and that means that your income is overstated. So that's a problem because then you'd have to pay more taxes, and we don't want you to have to do that. And then we've got some payable accounts here, some loans. We always want to make sure that those are correct and the correct balance, like the amount that you owe is accurate here. And that interest is being accounted for properly because you get to write that off. And then lastly, opening balance equity. This account should always be zero. And if it's not zero, then we know there's a problem. So I know this is a lot of information, but I just wanted to give you a glimpse of what accountants look at when we're checking your books that you prepare on your own, and give you an idea of what, for you might look like a clean set of books that's ready to go. These are the things that we see on our end, or some of the things that we see on our end that tell us that the books are actually not ready to go. So I hope this helps, and you can always reach out if you have any questions. Thank you.